Broadcasting from the Allen B. Levan NSU Broward Center of Innovation at Nova Southeastern University. Welcome to Sunshine Startups Live, featuring rockstar entrepreneurs, bright ideas, and experts on the startup ecosystem. And now your hosts of Sunshine Startups Live, Jim Ryan and John Wensveen.
Hi, and welcome to another great episode of Sunshine Startups Live. I'm entrepreneur, host, and startup enthusiast Jim Ryan, broadcasting from the Levan Center and joined by my good friend, John Wensveen. John, great to be with you again.
Great to be with you, Jim. Good morning. I'm John Wensveen, the Chief Innovation Officer here at NSU and Executive Director of the Allen B. Levan NSU Broward Center of Innovation, the world's first theme park for entrepreneurs. And I have a new title as of yesterday. It's unofficial.
Should we do a drum roll for this?
No.
Okay.
But it was by an external group that said, no, we are calling you now the Chief Disruptor of South Florida. So I'll take that one.
So that would be SDSF?
There's too many acronyms behind the title now. I don't even know. It's just John.
John.
How's that?
I love it. So we've got a great episode today. Maverick pioneer in the space. And, the purpose of Sunshine Startups Live is to really talk about, as John mentioned, those that have been disrupting the space. If you go back a decade or so or more, not much happening in the way of South Florida, but today's guest today has been sort of a pioneer, maverick in the space, helped disrupt certainly the state of Florida at the epicenter of Tampa. And Dave Chitester, original founder of Florida Funders and now founder of SeedFunders. And really happy to have him with us today. And Dave, thank you so much for taking the time to join us on the podcast today.
My pleasure, Jim.
So I'd like to talk, we kind of always wind the clock back a little bit because you've been an entrepreneur in your background. You've had some successful exits. Can you walk us through a little bit about your initial entrepreneurial experience and then kind of what led you to be sort of on the opposite side of that as a venture capitalist?
Sure. Well, my first company that I started was in Tampa. It was an engineering company, and my degree is in civil engineering. And I launched that and ran that for a number of years, and then eventually sold that to a public company in New Jersey. And during the time that we were growing, it was really tough to raise money. We had to factor invoices to the bank so we could make payroll. And I knew how tough it was to actually raise money to grow. And we had 30, 40 employees, and it was pretty hectic. And eventually sold that, as I said, to a public company in New Jersey. Meanwhile, my wife Kathleen and I started another company. It was an online company to do continuing education for architects, engineers, and contractors. And that company took off, and that became very, very successful. But again, it was really tough to raise funds. It was really tough. We launched that in March of 2000. Now, if you remember that was the day the NASDAQ peaked, we launched. And everything went downhill for 8 months. And people said, oh, yeah, companies like Webvan was worth $5 billion and they're out of business and you're starting an internet company. So it was really tough to raise money. And but we did it. We were successful. Ran that for 3 years and it was getting bigger and bigger. And then I brought in Tom Wallace as CEO, took it to the next level. And then we sold out controlling interest in a Series A. Stonehenge came in from Tampa, VC from Tampa. In a Series A, we sold controlling interest, and then we sold final interest in a Series B. And then it was, okay, now what are we going to do? And so we realized how tough it was to raise money in being an entrepreneur and starting companies. So we started Florida Funders and said, let's help these companies. Let's help these companies that are now where we were when we couldn't raise funds, because the initial funding is the most critical thing in getting launched. So it took a while for Florida Funders to catch on. And then you said 10 years. Well, that was 10 years ago. Last week was 10 years ago. We launched Florida Funders.
Congratulations on that anniversary.
Thank you.
Yeah.
Thank you. Somebody reminded me on LinkedIn the other day that said, oh, congratulations. I said, oh, what is it? Oh, it's Florida Funders, 10 years. So we launched that, and that was tough because, as you know, 10 years ago in Florida, raising capital for startups was just something that was unheard of. And we said we're going to use crowdfunding to do that. And they said, crowdfunding, that's new. Nobody's ever done that before. And you're not going to be successful. And we literally did seminars and had explain what we were doing. And some people came up to my wife and said, what you're doing is illegal. You better shut down. The SEC is going to shut you down. FINRA is going to go after you. And we said, no, it is. It's legal. And it was. And that became very successful. And then after 3 years of that, again, decided to retire for the second time. And that lasted about 9 months. And then decided to get back into it and start SeedFunders.
So you are a failed retiree.
Twice.
And a successful entrepreneur. And we're very fortunate to actually have your wife in the studio with us today, which is exciting. So let's talk a little bit more about that journey. And you talk about the challenges of raising money during good times and bad times. And I think South Florida's on fire. It's one of the hottest regions in the country. There's a lot of lights that are looking at us. And if you go back 10 years ago and you were an early stage entrepreneur, I think most people, especially around the Miami areas, the friends and the family, and then once they got that, what do I do next? And I remember doing some studies that basically said it was very difficult to get money beyond the friends and family network, and then most of these companies either weren't successful or they never grew beyond 20 employees, which is the bulk of small business in South Florida. Given the environment that we're in right now, we obviously have peaks and troughs of things that are happening, a lot of external challenges that no one can predict. Is the money-raising environment as difficult today as it was then? And we're grateful for you and resources coming into this community, because it seems like there's a big valley between raising that friends and family and getting that initial seed capital, and then a gap getting to that larger level, which seems to be a big frustration. I'm really curious what your perspective on all that is.
Yeah, that's a great question. And you go back 10 years, again, you say 10 years ago, what was it like? When one of the criticisms about us starting Florida Funders was there's no follow-on capital. You're going to start these companies. You're going to get them launched. As you said, you're going to get them launched, and you're going to put $100,000, $200,000, $300,000 in, and there's no follow-on capital when they're ready for $1 million. Well, it turns out today Florida Funders is the follow-on capital, because we've done deals where they follow on after a year after we invested in SeedFunders, invested in companies in the early stage, and then Florida Funders and others have come in. So now there's a lot of follow-on capital, Deepport Capital, Miami Angels, New World Angels. There's a lot of follow-on Florida Funders. There is a lot of follow-on funding now, but there's still that, we call it the valley of death, where they get, as you say, the friends and family round, they get a product, they get an MVP, and all of a sudden they need $100,000, $200,000, $300,000 to get to launch, to hire some marketing people, to get to the point where they can then a year later raise $1 million. And nobody's still doing that in Florida. SeedFunders is the only group in Florida that concentrates in that area, because it's high risk, but again, it's high reward as well. So it is easier to get follow-on funding now, certainly than it was 10 years ago. But nobody's doing that initial 100, 200,000. There are some organizations that'll do it, that'll dip into it, but there's none that are committed to it like we are. So we call that the valley of death, and I have a chart that really shows how that goes down, the negative cash flow goes down, and all the money runs out, and somebody needs to come in with that money to take them out of that valley of death, to get to the point where venture capitalists now could say, oh, this company now has revenue, they have product, they have clients, and we're willing to put $1 million in to get them to the next level.
I like how you said committed with conviction. You're actually, this is one of the few resources I think that has this perspective on what's needed. So we're, again, very grateful and thank you.
So Dave, you talked about how the market has changed from a venture capital standpoint and what it was like a decade ago. You know, when you had your cowboy hat on and you're like, let's foray into this space. How else has the market changed? Either from the types of businesses that you saw early on to where we're seeing it today, maybe also the university systems or the accelerators, like for example, like the Levan Center. So from your perspective, as you sort of a historian in the space, how else besides venture capital has the markets changed?
Yeah, I've actually done a whole podcast on the Florida ecosystem, on the changes to the ecosystem over the last few years anyway. And there are a lot of universities now that are teaching entrepreneurism or have a center, an entrepreneurship center that didn't exist 10 years ago. There are a lot of organizations. There are a lot of publications. There are a lot, Florida Venture Forum was one of the first back then, and they're still very big. They're probably still the biggest in the state in this area, but they've grown as well. They've grown. They have different publications, they have meetings, they have huge meetings of people. So the whole entrepreneurial ecosystem has really, really developed well. And then, of course, since COVID, Miami has become like the crazy person, where all the really high revenue people, high investment people from New York have come here, and they're investing, they're funding, but they're doing the $1 million, $5 million. They're doing the bigger checks. But the whole ecosystem, to answer your question, the whole ecosystem has developed tremendously in the last 10 years, all for the better, but there's still a long way to go.
Is there commonality, just to follow up on that, is there commonality with the types of companies, or are you seeing more companies that have a maturation to them, higher educational level?
It's really the technology. It's the technology side of things. You still have the companies that'll be a mom and pop or a lifestyle company. You always have those, but they aren't really investable by outside venture capitalists or even angel groups. So you still have a lot of those, but you're seeing a lot more technology as the universities educate people in technology. And now we're getting to a whole new phase with AI. AI is going to dominate. Every single startup is going to have to use AI in some way or some form, machine learning or AI, or they'll get blown away by the competition. So the technology is what's really, really developed, along with the universities feeding the technology and the education side of things, as well as the entrepreneurship centers like Levon.
So let's talk a little bit more about the ecosystem. From our perspective as a center of innovation, we look at the ecosystem around innovation, technology, and entrepreneurship. And the reason we select those three themes is because innovation leads to the creation of new technologies that leads to these entrepreneurial journeys. And South Florida, again, as at the opening, mentioned that we're really on fire, so we're not as mature as some of the more established cities and regions in the country and other parts of the world, but we're certainly accelerating. And if you think about what are the elements that make up an ecosystem and make it successful, where are the gaps currently here in South Florida or Florida as a whole? What are we missing?
It's getting there. It's getting there, but the universities still need to step up. We need more talent. We need more really high-level talent that doesn't leave the state, that doesn't get educated in the K through 12s and have the top graduates of K through 12 leave the state and go somewhere else for the higher education and then end up not coming back. Mm-hmm. So that's huge. The funding is getting there. I think we're seeing a lot of funding that is happening now that didn't happen not too long ago. But there can be more funding, particularly in the really early stage. What we're seeing right now at SeedFunders is there's a lot more interest in our investors and partners funding follow-on deals for existing portfolio companies than there is in funding new deals, in funding companies that haven't raised capital yet. So we've seen that just this year. We've funded 6 companies this year. 5 of them are follow-on of existing portfolio companies. Only 1 new. So it's getting still really hard for that, and probably even harder for that entrepreneur to raise that first capital, that first $100,000, $200,000, where the follow-on capital is still doing pretty well. And even within SeedFunders, the follow-on capital in subsequent raises, as I said, is a lot more. Our partners are a lot more interested in that now than they were maybe a couple of years ago. We wanted to fund a lot of startups or a lot of really companies that hadn't raised money before.
What do you attribute that to? Is that due to the economy? Is that venture capitalists' reluctance to sort of take the plunge into something that they're not familiar with, and so they have greater confidence that there's already been some traction and they want to come in with another tranche of cash?
The answer is yes.
Yeah. Yeah.
The answer is yes. The capital is slower in being deployed and more targeted. And so the capital is being targeted more toward the companies that already have traction. They already have something. They're getting to the point where they can see clients and talk to clients and things like that. So the economy is a huge part of it because people are just they're keeping a hold of their wallets. They're just not really jumping in like they did when we started SeedFunders in St. Pete 5 years ago. We had people just wanting to write checks. Yes, this is great. I heard all about this entrepreneurship. I've never done it before. And the people are wanting to write checks. Big difference now. People have learned about entrepreneurship. They've learned about innovation. And like, okay, I need to be more particular in what I'm writing checks for versus just let's write some checks just because. And even now, AI 6 months ago. AI, okay, here's a check. That's slowing down. people now that have AI products are looking at, they're more, people are getting more particular about investing even in AI nowadays.
So if you look at emerging technologies and AI being one of the big buzzwords right now, I'm curious from your perspective as an investor, where's the world going over the next 2 to 5 years? It's hard to look really much further than that because things change so happen. And I would debate that technology is accelerating at such a fast rate that the human being actually can't keep up with technological advancement. There's a crossroads coming, and it could be a potential crisis situation. So how do you minimize your risk and get the greatest returns given the environment that we're in? Because I still believe that AI is not fully understood. We're still the pioneer years of what that is. But there's a lot of risk that's associated with that because we can't look into the crystal ball. But where are we going?
Oh, if I knew that answer, I wouldn't be here. As you said,
and the Powerball numbers.
Yeah. Is it still 1.5 billion or is it higher now?
Going up.
Oh, it's going up? Okay.
As you said, the AI, and I've got a partner in St. Pete that I met with last week that told me that he was very big into AI. They're doing training. They're doing things that are up front in the industry, and finding that there isn't enough knowledge in AI right now to even make a decision. There isn't enough. And he said it's going to be 2 or 3 years before. We're in such that we're in the first inning. That it's 2 or 3 years before there's going to be any idea whether what's investable and what's not, and what's going to be successful and where things are going. So there's a lot of development to be done yet. And it's a lot of, and what we're trying to concentrate on is business applications. Solving a business, using AI to solve a business problem, not using AI because we need to have AI. And we've seen a lot of companies say, we do AI, and then when we look at what they're doing, it's like, yeah, okay, maybe it's machine learning, but maybe not even that. But so I don't know the answer, but it is, as you say, it's not here. It's years away.
And ChatGPT probably can't give us the answer. It'll try, but I heard an interesting statistic recently. I don't know if I've shared it with you, but do you know how much ChatGPT costs to operate per minute? $70,000 per minute. So it also makes me wonder, is it going to come down in price? And maybe ChatGPT a year from now, it's in the dust, and there's another thing that's out there that's replacing, because there are other things that are emerging. But I just thought that was kind of interesting. But I really like your answer, because I know it's impossible to tell. And that's why I keep coming back to this human adaptability to emerging technologies and whether or not we are in parallel and sync. And I think you bring up a very good point, too, is that, yeah, okay, I'm doing AI, or maybe it's machine learning, but am I doing it just because, or am I actually solving a problem? And how do you distinguish between what a problem is with a solution versus not, and is that an investable opportunity? But I think you're bang on with something there, so I like your perspective.
That's exactly right. The AI, and we see hundreds of companies, and every one now says we're using AI, and very few are, and very few even understand it. And we have one expert we rely on who is an AI expert, and he'll tell us pretty quick whether it's really AI or whether it's just window dressing, and whether
or
it's
some kind of novelty that it really there's no practical application to it.
Exactly. And we've seen that as well. We're using AI to do this. It says, well, who cares? It's not a problem. You're not solving any problem. You're just using a buzzword and hoping somebody will give you some investment.
Makes sense. Let me ask you, we were talking about AI and some of the companies that you're seeing, the hundreds of companies. What is sort of how many companies have SeedFunders invested in today? So for those that are viewing the podcast, entrepreneurs, and talk about the thesis of the fund itself.
Sure. We have 25 portfolio companies right now, and our thesis is pre-revenue, scalable technology in Florida. Now, we've gone outside of Florida a little bit, and we've gone outside that investment thesis. But basically, when we look at a company, we say, is it pre-revenue? And early revenue is fine. But if it's got 500, it's starting to get $1 million in revenue, that's too late for us. So we want pre-revenue or earlier revenue, and scalable technology. To answer your question, scalable technology, industry agnostic. So it could be in any industry, but industry agnostic, scalable, a scalable technology business, and hopefully in Florida.
B2B and also business to consumer, or it?
Good point. B2B.
Okay.
Yes, B2B, and funny. I was thinking this morning actually about the companies that are doing well and the ones that are not, and we invested in 4 IoT companies, B2B IoT, and 3 of them are probably our worst 3 investments. So, and then the other one is our best investment. So I don't know how you tell the difference, but out of the 4 IoTs, they're all B2B IoT, but there is a physical component to it, and that physical component on those 3 that are not going to make it are that's critical, that physical component. So we're trying to stay more into strictly the software and the software and platforms and things like that.
I had an investor come through recently. He said, John, if you can find me a company that doesn't have people and doesn't have inventory, I'm going to be the first person to sign up. So I'm looking for what that opportunity is. I can't think of it yet. But you bring up something really interesting too, and especially for those early stage entrepreneurs or those that want to go into the sector of being an entrepreneurship. We're often asked at what point is too early versus being too late. So if you think about, and this would be a welcome discussion to many people in our audience at the early stage, at what point do they start to go and knock on doors to try to find that money? What do you need to see? And the second part of that question is, are you investing in my business model, or are you investing in me?
Great. I've done 2 podcasts. One, is it the horse? Is it the horse or the jockey? And it's both. It's both. There has to be, for us, there has to be an MVP, minimum viable product. We don't invest in ideas. That's got to be the funding of the family and friends or the bootstrapping. So we want to see an MVP. But once somebody has an MVP or they're close to an MVP, then it's time to start looking for that funding. How much do you need? Don't go, we see a lot, I need $1 million, I need $2 million with an MVP. No, if you get 100, 200,000, get some clients, get some feedback. Use your feedback to develop your product before you go out for $1 million or more. So it's not too early to go for that. After they have an MVP, it's not too early to start looking for that $100,000, $200,000 to hire somebody to start marketing, start talking to clients and rolling it out, and basically looking at how can we make this better and get clients, get revenue, so then we could go for the $1 million in a year or 2. So I would say after an MVP and before you actually really roll out, if you don't have the funds, that's when the entrepreneur should start to look for funding.
So if an early stage entrepreneur comes to you in that category that you're just defined, and they say that in their financials, part of that money that I need is to pay myself. This is an interesting question. Do I pay myself? Do I not pay myself? If I have a full-time job and it's my side gig that I want to make my full-time, or I have nothing else but this, so I'm putting my heart and soul, I've mortgaged my house, I've racked up my credit cards, but I need X dollars to fund myself and a team to move this forward.
I love that question because I have a very definitive answer. It's absolutely necessary for entrepreneurs to work full-time, and it's absolutely necessary for the funding entities to provide those funds. And I've seen panels where people ask that question. Absolutely no way will we fund an entrepreneur's salary. Absolutely no way. I'm totally against that. And I'll give you a quick story. Our first investment was a company out of Tampa, $150,000 we invested in. $150,000. Nobody would invest in them. They were too early. The entrepreneurs, the 2 founders, said we were going to draw $3,500 a month each. So half of our money is going to go to pay the entrepreneurs. A year later, and we invested at $1.5 million valuation. A year later, they closed a round at a $4.8 million valuation, and they said we would have never made it that year had we not had your $150,000. That company last year closed a Series A at a $24 million post.
Wow, that's exciting. And I was curious where you're going to go with this, because most people that I pose a similar question to, like, yeah, no, your sweat equity is the investment, and we'll see where we go. But that's a great story. We need more of it, and it takes money to make money, right? And to me, it's sort of like an apprenticeship model or an internship. I don't believe in free interns. I believe in compensating them for a number of different reasons. And it sounds like you have a similar mandate with what you're looking for in your investment. So I applaud you for that.
Dave, I'd like to ask you. You mentioned earlier, before the podcast started, we talked about even businesses, entrepreneurs that being coachable and so forth. How involved are you in the business? You and your team post check. Are you checking in with the entrepreneur? How does SeedFunders help sort of support the entrepreneur that upon receipt of the initial investment?
Studies show that the success rate of companies that are invested in depends on three things. One is how much due diligence you do up front. So due diligence is key. The second is how much knowledge do you have of that industry. So somebody on your team, somebody in your group, in your angel group, has to have knowledge. And the third thing is how much do you support the company after you invest. So that is one of the three key factors in making successful investments. So what we do, every investment we make, we have a lead partner. We call them a manager. We have a new name for them now, but we call them a lead partner. And that lead partner signs an agreement and says, okay, I'm the lead partner in this. I'm going to do this, this, and this. And if it's successful, if there's a successful exit, our lead partner gets 1/4 of the carried interest of that deal. They don't get paid. It's all volunteer.
So it's an incentive for them to actually roll up their sleeves and get involved and understand what's going on with the entrepreneur. And
Exactly,
the business. Yeah.
because there's a huge upside. If that company that's now worth $24 million and 1/4 of that carried interest that we would get on an exit could be a very, very large number. So that incentivizes, as you said, the entrepreneur or the investor, the partner in SeedFunders to be involved and help that company succeed. So we do try to do that. We aren't as successful as we would like to be. We typically get on a board position. The company I just mentioned, I was on the board for the first year. So we typically get a board position, and we try to help them get to that level. And as you said, if they're not coachable, sometimes that just doesn't work. So we try to make that one of our criteria, in addition to being, as I said, pre-revenue scalable technology in Florida, is the founder coachable? And that's a huge question that we need to try to find out early on before we invest.
So you bring up something that's really interesting to me. If you think about success of a business, and let's say break it down into three elements. If you have the right people, the right plan, and the right money, and if one of those things is wrong, it could be detrimental to your success. So if you're investing into a company and you really like the lead founder, they're great, you believe in them, but then they have other members of the team that you question, is that contingent upon whether or not you get involved with that organization, or do you put stipulations around that? And I've been there looking for money, and I had people on the team that really weren't suitable for the long term, and the investor in one case walked away. Another one said, well, like you said, if they're coachable, we'll stay with you and we'll take it to the next level. But I'm just curious how you handle situations, because you have the best thing in the world, but if you don't have the best people around you, what do you do?
Yeah, that's exactly right. And we look at the whole team. We'd like to see 3 members of the team. A lot of teams are typically 2. We won't invest in 1, we'll invest in 2. But we like to see 3 because you need the subject matter expert. Mm-hmm. You need a financial person and a technical person. Mm-hmm. So sometimes the technical person is the subject matter expert, but you really need to have an IT that can really do the code, that can really understand all that. Mm-hmm. So you've got to have all 3 of those. And from the financial side, the financial management is huge. So we do look at the whole team, and one weak link can cause us to reject a company.
Mm-hmm. How do we move the ball continued forward? Tough economy right now, obviously potential talk of a recession happening. From your perspective, obviously we just shared not a prognosticator, looking at a crystal ball, but you were at the epicenter for Tampa. Tampa had an incredible explosion. What needs to take place? Additional money, bolstering the education. What continues to need to take place in order to move this needle forward?
Yeah, I don't think it's the funding. I think there's enough funding. It's getting the entrepreneurs to have valid ideas, to have valid companies. We see a lot of things that just aren't really viable. Just everybody wants to be an entrepreneur, and I'm going to do this. We need to somehow get more good ideas right from the beginning. Good ideas that, this solves a problem, and this is not just, I'm going to be another Facebook, but I'm going to do it better than Facebook. No, you're not. We see a lot of that. So I think the original ideas that come out of the universities or come out of the entrepreneurs solve a problem. We'd like to see the entrepreneur coming out of the industry that they're servicing, not a developer that says, I think I've found a problem in this industry over there. We need to see those ideas coming out of industries from experts that are in that industry that say, I want to start a company because I see a problem here. So I think we need more of that coming out of something without a lot of precedent. where companies say, I can do something that nobody's doing before. And that's kind of, my philosophy is go where the blue ocean is, where nobody's doing that. Right. And then you could be successful. And we don't see a lot of those. We see a really, really lot of just, I'm going to do this, and so is everybody else. Uber's a great one. I'm going to do Uber for packages. I'm going to do Uber for dogs.
That was big for a while, wasn't it? You were the Uber of X.
Yeah. So originality, I think original ideas is what I see lacking. The area that we're in, obviously, being the first money that comes in, we reject a lot just because there aren't original ideas.
So as Jim likes to say, John likes to throw a Rubik's Cube into the conversation. So I'm going to throw you one and see what your reaction is. We talk a lot about targeted verticals or industries. And if you look at communities across the nation, it's the targeted industries that are the industries of the future. What if I said, we're not going to be talking about industries in the future. We're going to be talking about new economies instead. What would that mean to you? That's why it's a Rubik's Cube.
Yeah, right. Yeah.
And I can shed more light on it if you want me to. I can expand upon it.
Well, I think what that means is, what it means to me is that things are always changing. You got to be alert and what's changing and what's the future going to look like. Yogi Berra said that the future is hard to predict, and especially when it's in the future. So, it is hard to predict, but you've got to be alert. And we've seen a lot of failure, and I've studied a lot of reasons. I did a podcast on reasons business fails, that startups fail, and a lot of it is they don't look into the future. They don't see that things are going to change. They don't accept. They think it's always going to be like this. So I think as things, new economies, new whatever is changing, you've got to be alert. If you're an entrepreneur, you've got to be alert to that, and an investor. You've got to be alert to what is changing and keep up with it.
So if we were to do something like a fail-con, not talk about success, but talk about failure, do you think that'd be a good idea? Something that people would want to be interested in, where they can come and learn from others that have failed and how they strategize around that?
I think so. And there's a lot of studies out there, and it's there are reasons. There are specific reasons that can be boiled down to why companies fail. And I'm sure every one of those that you would put up there and ask them what their problem was, what happened, they would say we didn't get enough money. But that is not it. That is not the number one, not even close to number one. Running out of funds is not close to the number one reason. So I think if you did something like that, everybody who said, here's why I failed, I think a lot of them would say we didn't have enough funding. But that's not the reason. The number one reason, number 1, 2, 3, and 4 reasons are all related to clients. They're related to clients. And I don't think you're going to get anybody to say, oh, I didn't meet the client's needs. Well, you didn't anticipate the client's needs. You didn't pivot to meet the client's needs. So you ran out of money. If you had more money, you would just lose more money because you weren't meeting the client's needs. So I think that's very important. And I think that'd be an interesting podcast or an interesting presentation to ask people why they failed and see what their responses would be.
Could be another event at the Levan Center, FailCon 2023.
That's exactly what I'm thinking with our co-host.
Exactly.
So one thing I've taken out of this conversation, many things, but one thing I've really taken out, which I really think we should highlight and encourage our audience to take advantage of, no matter where they are in their founder's journey, is that everybody's got an app for that, right? Everybody's got an Uber. Everybody's got this. I like what you said about going to Blue Ocean, going where no person's gone before. And I think the challenge is, well, how do you direct yourself in that direction? And how do you discover something that nobody has ever done before? And I think if we can help solve that, the world's going to be a better place. But I think that's great. Encourage people to go where no one's gone before, right?
Yeah, the biggest problem we see with that, from my partners anyway, when somebody presents something that nobody's done, they always say, well, if this was feasible, somebody would have already done it. And we're like, well, not really. Or why, if you're going to do this, why hasn't Google already done that, if that's feasible? So you really got to separate that out from, well, maybe it is possible to do things nobody's done. Maybe Google hasn't thought of it, or if they have, they say, we'll buy somebody. When they start it and get it to the point, then we'll buy them out. We'll buy a startup out to do that. We're not going to develop it ourselves. So there are a lot of reasons for that.
So if Google's listening, the Levan Center might be for sale.
So Dave, I'd like to thank you for all the things that you do in the state. I know you mentioned about doing a lot of panels and support. So, obviously you and SeedFunders are a real part of the infrastructure here on helping bolstering the ecosystem. So I'd like to thank you. And then John mentioned, obviously, for the startups that are listening, how do they get a hold of you?
I answer every single email that I get, dave@chitester.com. And on our website, my email's on our website. I don't answer phone calls because I get a lot of them. My voicemail actually says my voicemail is not monitored. So send me an email, and I give my email address. So look at our website for applying. There's a link on there, apply for funding, and they fill out. We use Dealum for deal flow management, and they can put all the information in there. Or send me an email with a pitch deck or something, and I'll respond, say, go to Dealum and fill it out, or this is not in accordance with our investment thesis, or whatever the appropriate response would be.
Dave Chitester, SeedFunders, thank you so much for being on the podcast today.
My pleasure. Thank you.
Thank you.
Remember to subscribe, like, and share the Sunshine Startups Live podcast, and follow us on social media. If you're interested in sponsoring or appearing on the show, please email us at booking@sunshinestartups.live.